Welcome to Business Matters. Today, we will be looking at managing personal income and investment. That is, managing personal income and investments. Our lesson will be guided by a few objectives. These are to outline ways used by individuals to manage personal incomes, to differentiate between savings and investments. And thirdly, we'd like also to look at an explanation of the concepts of short-term and long-term financing. So we'll seek to be guided in our deliberation by these objectives. Personal income. Now, to live and to be able for us to live and to be able to access goods and services around us requires discipline in managing our resources. And as human beings, we all have needs, and we require that these needs will be satisfied. Now, what is an income? An income is money that a person or a business receives in return for working or providing a product or service or investing capital. So when we talk about income, then we're talking about monies that we earn or receive as a result of either working, providing our labor, or we trade goods and services, or we also invest that capital in order to get a return. Now, a person's income may also be derived from a pension or government benefits, or they may also obtain income from gifts. So what we're saying is these are other ways a person may obtain income from their pension. So if a person is retired and no longer is working, then his or her income will be may come from pensions, or they may obtain some particular benefits from government. Maybe, for example, the government have poor relief, or through NIS they provide benefits, funds to help individuals in the society that are in the lower income or who are unemployed, etc. Or they may obtain income via gifts. Now, how to manage income? Very important. The most credible way to manage income is by using a budget. It is something that many of us do not want to talk about, but it is the reality that in order to manage income, a budget is necessary to be drafted. So what is a budget? Well, a budget is a financial plan. What did I say? A budget is a financial plan. And the financial plan seeks to manage the inflow and outflow of funds. So a business needs to manage the inflow and outflow of their funds, just as an individual or family is required to do. Now, matching income against expenditure is what the budget seeks to do. Your personal budget will help you to make the most of your money and avoid overcommitment. So when there's a budget, then it will help you, to avoid overcommitment. Budgeting is the process of creating a spending plan. Very important, a spending plan. Now, you will be able to cut. So we're looking at the benefits now of budgeting. What are those benefits? Well, one, when you are budgeting, you'll be able to cut out unnecessary expenses, save more, and stop the increase of debt. Secondly, the budget provides a benefit that you can really reveal. The budget reveals, yes, the areas that needs to be fixed. All right, so it can reveal areas you need to fix to get out of debt. It also locates where you can find spare cash. The budget provides help to shed light on bad spending habits. Yes, that's very important, because some people, all they do is as soon as they have obtained money, they are seeking to spend. All right, so a budget will help you to curtail and manage bad spending habits. As well, a budget helps you to prepare for emergencies. Now, what are those sources of income? For once we're talking about budget, we must also look at where are our sources of income. Where is it coming from? Or income coming from? Now, some persons earn regular income from employment. That is, they may receive wages, or they may receive salaries, or they may receive commission or bonuses. Now, wages are normally paid maybe weekly, can be for a job work, or it may be bi-weekly or fortnightly. But salaries tend to be fixed amount that is normally paid on a monthly basis. Commissions are like a job you get to do and you are paid a percentage of the value of that work, or bonuses. All right. Source of income as well may be interest from savings account. So you open an account with the bank, and the money you deposit in the bank, when the bank lends that money to others to use, and they lend that money to, let us say, businesses and other individuals, right? They will now obtain from those individuals, and they charge them an interest, and of that amount of interest that they charge the lenders, yes, or the borrowers rather, they will now allocate a portion, a small portion of that as interest to all the saving account holders. Dividends. So you also may obtain income from dividends as a result of you investing in companies. And that may be you buying shares in the company, you're part owners of the company. So when the company makes profit, you are also obtaining part of the profit is paid to you in the form of dividends. All right, so another source of income may be rent from lease property. So that means you may have a property and you rent it out and or lease it, and you're obtaining funds from it. Gifts from relatives and friends. So this is also another means by which income may come to an individual. All right, they may receive gifts from relatives and friends, and if they are retired, they may obtain pension. Now, ways of spending. May we look at the ways of spending. Now, this is the first one we want to talk about is compulsory payments, right? Now, one of the things that once you are employed or you're working in the country, you are required to pay over taxes, and refer to it as statutory deductions. So the government takes that out of your salary before you are able to receive the money to spend. All right. So they take out the tax out of your gross salary, and they leave the net salary to you, or what we refer to as a disposable income for you to spend. That's what you get on your check. So The individual is required to pay income tax, national insurance, deductions, education tax, and in Jamaica, NHT as well. Now, there are some other essential payments, yes? So apart from the compulsory payment that one has to make, yes, you don't have a choice in that matter. There are some essential payments that one will be experiencing as a result of living on it. Basic things that you have to spend for to survive. That will be food and clothing, rent if you rent the place, mortgage if you have borrowed money to build your home, and of course utilities. So we have the third types of spending, and that is optional or choice spending. And that this is where now you're spending for leisure time outing or luxury items. So to spend at some time away at a hotel for vacation, or to go see some important sites and places and to have fun and so on. Luxury items, yeah, those are optional or choice spending. Now, how to begin to prepare a budget? How do you begin? How do you begin? Now, what has to happen? The first thing is to begin to work out what you spend. So if you're starting today and you want to look at preparing a budget, you have to consider now, what are my spendings? How am I spending? What are those things I am spending money for? You need to track them down. So, for example, you are going to be checking your bills for utility costs, such as gas, water, light, or telephone, right? You're going to be ascertaining these varying costs, yes? Insurance and more. If you are paying insurance, you want to also consider that. Paying mortgage. If you are a person that is taking care of child support, yes, you have a child and for someone and you are required by law to support that child, then that's a cost that you have to take into consideration. If you had borrowed a loan and you have to make payments. What is also important, secondly, is that you need to estimate what is spent on essential items. So like your food and clothing, yes, you may want to have an estimate of how much you think you would have been spending per week or per month or per year. The third thing to consider is an estimate cost for unexpected or choice spending. For example, you need to consider, let us say you have you decided to buy a car, so you need to estimate the cost for gasoline, for maintenance of the vehicle, etc., house repairs, entertainment. Fourthly, you check your salary slip to get an accurate picture of your earnings. So if you're going to make the budget, now you have identified all the expenses that are likely. Now you want to look, what are my income? What is the real figure of my income? And you would want to be accurate to check, yes, your pay slip or so on, to determine what are you earning as a salary. You may also want to check up for other income such as rent from tenants, contribution, dividends, or interest, as we spoke about earlier. Now the sixth thing that is important is that you need to average out any irregular income, right? Using an estimate, any irregular income. That means there are things that are coming like seasonal. It is not something that comes every month or every week. So if you have, for example, plant citrus, and citrus come at a particular season, and you normally plant these things and you will sell them and trade them for money, then they are only coming at a particular season. All right. Do not use one-off income. So you were advised not to use one-off income. So you did this particular job. You get this particular job to perform, let us say to cut a lawn, and you get that job to cut the lawn. That's a one-off job somebody gave you. You cannot factor that into the budget because it is not something that you're going to be seeing or getting again, right? And it may misguide you in terms of how much you are earning. Now, how to deal with shortfalls in your budget. If you're finding after you've prepared your budget and your personal or family budget, and there seems to be a shortfall, how do we treat with it? If income falls short, yes, fall short for expenses, then this is what we suggest. One, prioritize your spending. Now you're going to look at what is most essential, most important, and that you're going to spend for them. Shop around for cheaper alternative and prices that will help you to cut down your expenses. Reduce everything down to basic needs. So keep your spending only for essential items. Find a way to reduce your budget, your debt rather. Find a way to reduce your debt. So you have to look at how you are going to bring down the debt, your family debt, personal debt, business debt, so that there be more cash flow to use to manage other expenses. Seek out benefits and tax credits. So take advantage of whatever benefits that is available out there in the market or in your business transactions, or whether there are tax credits, you may take advantage of that so you're not spending too much. Number 6, involve everyone in taking responsibility. This is very important. In family, involve everyone in taking responsibility, in cutting expenditure and sharing the burden. What happens here is that once you have the buying from everyone, then they will all be careful how they are spending. All right, so that what will happen is that everybody's sharing the load of bringing down the debt. So we have just looked at the first half of our lesson on managing personal income and investment. Thank you very much. If you like this video, please indicate by clicking the like button. And if you so desire, please, we ask that you click that subscribe button, showing appreciation to us if you're liking the content that we share with you. Thank you very much.